Welcome back to the second episode of the Bullish Trading Group. We are happy to be here. It's myself and Coach Carver. And what we really wanted to talk about today, we feel like this is just one of those reoccurring things. And it's just, why do traders fail? I think this is one of those things that a lot of people tend to just look over. And, it comes from the simple things of not paying attention to your trading plan, revenge trading, which is I've been on that end of things where I felt like the market should have went my way. It didn't go my way. It ended up stopping me out. I got mad, went ahead and took a re-entry, and then it reversed back into the original way. I've done a lot of that in my day, just because I knew I was 100% right in my mind and that it needed to go my way because I needed the money now for something. And that's where we see a lot of traders fail, is because either they're expecting cash right now. They chase the market, or they want a revenge trade, or their psychology's off for the day because something happened yesterday and they're carrying everything. They're carrying that weight from yesterday back into today. And so this is where we just want to try to just give a little insight and not necessarily help you solve your problems, because we can't be the ones to help you solve a problem, but we sure can guide you to helping you build that self-awareness to, instead of you being a failing trader, to you being a profitable trader. Traders, before I hop into today's episode, I just want to remind you that the Bullish Trading Group is a growing platform of like-minded traders and investors who want to learn more about using trading and investing as a tool to change their life in some way, shape, or form. We hope that you enjoyed this episode of the Bullish Trading Group podcast, and be sure to share this with someone that you think will gain some value that could potentially put them on a better path.
When you take a look at it, 95% of traders are losing money, right? And there's many reasons for that. And just throughout my trading career, I've been able to, find some of the biggest ones is, just first of all, just lack of knowledge, right? A lot of people come into this space and, they may not know enough. They want to just super eager to get that live account like Adam was talking about. Maybe they wanted to, earn whatever money to pay whatever bill or do whatever thing. I get it, right? You come in, you want to start making money. It's easy to, just get into that mindset, right? You see your friends making money, you've seen somebody online making money. It's natural for you to want to come in and make money. But without that education and with that lack of education, you're setting yourself up for failure, right? And we see this time and time again, people coming in, not necessarily knowing about the markets, or maybe they, watched one video and they're like, oh, I'm good to go now. Like I'm a master at this. I've seen one 13-minute video and now I'm a legend, right? And people don't understand that, like, when you go through this process, you can't just watch a video and be like, now I know supply and demand. Like, no, go jump in the charts and train your eye for supply and demand, figure out how it works with your pair during your time frames and stuff like that, right? You got to be able to jump into it and have that knowledge. And you have to always be learning within the space, guys. That is an absolute, bare minimum thing that you need to set yourself up for, is just continued education, continuing to learn, continuing to, put yourself in that position to, just really learn more and just continue to grow, right? So one of the biggest reasons that I see people failing is just that lack of education. Another thing would be that, like Adam was talking about, that rules-based trading plan, not having one. Right. It blows my mind to this day where I talk to traders. They're like, hey, man, like, I see you're profitable. I see you're doing good. You got a fun account, yada, yada, yada. And they hit me up and they're like, I'm just, I'm continuing to struggle. I'm doing this. And I ask them, I'm like, shoot me over a copy of like your trading plan, or like, what is it that you go through, like, to confirm your trade before jumping in? And a lot of people look at me like I'm crazy. Like, well, what do you mean? And I'm like, what do you mean? Like, when you put yourself in that position, you don't have a trading plan, right? It goes along with the quote. If you fail to plan, you're planning to fail. If you don't have that plan, you're setting yourself up for failure, because now you're not able to have that consistency within the markets, right? You don't have that thing to go back off of. If you're just jumping into the trade based off of market impulse or FOMO, you're gambling, right? Just because there's two options to either buy it or sell it doesn't mean it's either if gonna win or gonna lose, right? It's not just 50-50. It's not that plain and simple, because price fluctuates. It could bounce around, go down, hit your stop loss and shoot up, take profit, or vice versa, right? And that's the thing, is like, you need to have that knowledge. You need to have that plan to be able to come into this space and being able to, consistently pull money from the markets, right? So there's a couple of my biggest reasons why I see traders fail within the space, and just throughout my time of trading and just being around so many traders, that's one of the biggest reasons I'd say people fail. Adam, I'm pass it back over to you. What do you think is another reason why traders fail?
So I think there's a major difference between being a professional trader and being a professional gambler. For me. Now, this is just my theory, my ideology on this from whenever I stepped into the markets for the very first time. And this is just my thought process. So I'm not saying this is how it is. I'm not trying to tell you this is the way it works or anything. I'm letting you know this is the way my mind worked whenever I took a dive into the markets. My thought is you have two options. You can either go long on a position or you can go short on a position, right? So there's two options there. So that lets me know from the moment you either press long or short to get into a position, you have a 50-50 chance of either winning that trade or losing that trade. And so that's where a lot of people come into the market. They understand that probability, but if you just go based off of that probability all the time, that's what makes you a gambler versus being a trader. Because with a trader, you're supposed to have a strategy that gives you confluences, that ultimately gives you the confidence to go ahead and enter that trade. Some of those confluences could be, okay, did that imbalance get filled? Did it go and grab liquidity? Are you running like an EMA strategy where you see the death cross? Did that 200 cross over the 500? Did the 50, or not the 500, the 50? Did the 50 cross over the 200? Or if you're more of like a smaller scalp trader, did the 9 cross back over the 20? Or whatever it is, those are confluences in order to go based off of that trading plan that we're talking about. So whenever it comes to ultimately entering that market where a lot of traders fail, they forget to go back and look at those plans and actually physically make check marks on each confluence. Like, okay, did that death cross happen? Yes. Boom. Did it fill an imbalance? Yes. Boom. Did it go and sweep liquidity? Yes. Boom. This is just holding yourself accountable to make sure you are 100% certain in your mind that this trade is going to play out in your direction. Guys, trading at the end of the day is nothing but probability and risk to reward. You just got to make sure you're on the right side of it. But like I said, that is just my thought whenever I was a very beginner trader before I began to watch any type of videos. My thought is like, okay, if I was going to buy a share of Tesla, I have a 50-50 shot of that thing going up. That's ultimately how it goes. So if you're able to create your own strategies based off of whatever it is that you feel most comfortable with, then in theory, your probability of winning a trade should go up. Now, I'm not saying like you're always going to be 70% right, 80% right, or anything like that. But what I'm trying to get across to you is that these confluences are there for a reason. You need to understand what that reason is. So that a way you can go ahead and categorize yourself out of being a gambler and into being a trader. So it's ultimately up to you. All we can do is guide you in the right direction and give you, reasons why you should do X, Y, and Z. That a way you can produce the results that you're looking to produce.
That's it, bro. I mean, that's really big, guys. You have to have a plan. You have to have a strategy. You have to have something to go off of to be able to have that consistency. Another big thing that I see is just people just overall over leveraging, right? Trading more money they can afford to lose, even on demo accounts, right? I see people come in. I mean, guys, it takes what? 15 seconds, 20 seconds to create a demo account. It's so easy to go and do it. And you see these people coming into the space, creating $100,000 demo account, $200,000 demo account, all these large accounts trading standard lot sizes. And that's the way they're practicing. But what happens is for those of you that may not be going for a funded account, but you're like, hey, let me just jump onto a demo account and trade this money, yada, yada, yada. And then I'm going to create a $300 live account or a $500 account or a $1,000 account. What happens is you're setting yourself up for failure because you're getting so used to seeing those large amounts and wins and losses and stuff. You go on that little bit of money. Now you're trading a micro lot, or, you're going and trading your mini, right? And you're going through and you're trading these small lot sizes. And you're like, I made $3.62. What the fuck? On the demo, I made 5,000, and it's like you start to do this and you're like, well, let me up my lot size. Let me up my lot size. And then you start using a little bit of a larger lot size, you start using a little bit larger of a lot size. Maybe a trade goes well and you're like, that's the answer. I just need to use a little bit larger of a lot size. Next trade, you get cracked upside the head. The market humbles you and reminds you that there is no surefire way of making money in this space. And you have to have something to go off of. You have to have that consistent risk. You have to have that consistent plan. You have to have that consistent mindset entering and executing and managing a trade, right? And this all comes into the over leveraging, guys. When I was in the Army, they taught us train as you fight. So for me, if I'm going and I'm practicing for a funded account, I would use the exact same lot size that I would use on that account. I would use the exact same balance that I would use on that account, and I'd go through and I would do that. Now, let's say if I was putting myself in a position where I'm like, hey, I'm getting into trading, I got $1,000 set aside. This is what I want to start trading with. Go create $1,000 demo account and start trading that. You don't need a $50, $100, $200, $500,000 demo account, paper account, if you're not going to be trading those accounts. What you need to be doing is trading as you fight and starting to understand that risk management and that risk to reward, because you see people come in and they over leverage, and you may not even be doing so and not even know it, because what happens is you go ahead, you're entering your trading, you're still dealing with all your psychological barriers that you have to overcome. So what happens is you jump into that trade, and for that first time when you put that stop loss, you may not be over leveraging. But what happens is, and I see people do it time and time again, and I have done it many times, and this is one of the hardest things that it really took for me to overcome, and it's moving that stop loss. Because the second you move that stop loss, that lot size is still consistent, but now your risk is much more. Now you're over leveraging, right? So you need to put yourself in the position where you're leveraging very small and minuscule amounts, right? Like when I took my funding challenge, I risked 0.5%, 0.25%, 1%. Not once did I risk more than 1% of my entire portfolio at any given time during my entire trading challenge in my live account, right? And that's what you need to put yourself in that position to not over leverage. Do not trade any money you cannot afford to lose. Do not be trading with unrealistic lot sizes that you won't be able to get your hands on, right? Practice with the money that you would actually be doing, right? So if you're going to start a $5,000 account, go create a $5,000 demo. You're going to trade a $500 account, go create a $500 demo. You're going to go for that $10,000 funded account, start a $10,000 demo and start risking 1%, 0.5%, 1/4%. Start understanding and seeing these figures and quit looking at it as X amount of dollars. Look at it as percentages and goals of being able to compound your account accordingly. What do you think, Adam?
I think you you brought up a lot of memories back whenever whenever I very first started trading. I remember one of my very first live accounts. It was right around $2,000. And at the time I was using a broker. It was I never like put myself in the position to like do like 1 to 500 leverage, because I just didn't think that was smart. But so I did 1 to 100.
That's you should, honestly.
Yeah. And what I did, right, is on that account, of course, live money, right? $2,000, like that's like all the investment money I had. And I would say I managed it well at the beginning. But for me, I wasn't making the money quick enough. Like Carver said, once you scale down and you're using like micro lots, and then all of a sudden it's just like, I took the same trade yesterday on a demo account and made $5,000. And here I am today making this freaking $3.50. Like, that's not going to pay for anything. Like, this is stupid. Like, why am I sitting here doing this? And so then I just went ahead and scaled up to a whole full standard lot, because that's what made the most sense in my mind. I mean, that's what made sense. Like, each pip was $1, each pip was $1. It's like, this is where I need to be. I'm not saying I blew that account, because I was able to still withdraw money out of that account, but I wasn't necessarily able to make any money on that account. Because I kept it above $1,700. Like, I never lost more than $300 on the account. But I was able to fluctuate, I should say. So I was more of like break even on the account, not necessarily break even on my trades, but break even on the account. So like, it may have got up to like $2,200, $2,500. And then all of a sudden I'd take a trade because I was so confident in it. And I may have scaled up to like a 1.5 lot. And then all of a sudden, that mental stop loss that I had is like, okay, if it hits this certain level, then I'm just going to go ahead and stop out. And then, of course, it gets to that level, and then it's like, well, I think if it gets to that level, then I'll be out, because this trade's going my way. I see it. Like, I did my due diligence on this trade, and then of course, then I'd ultimately get stopped out for like a few more $100 than I thought I should have just stopped out at that $50 loss, and now here I am, just lost $250. So you just brought up a lot of memories.
There's a lot of them, bro. We could sit here for a while and just talk about all the stupid shit we did in our trading, bro. Like, It's so big, man. Like people just, when you're in that moment, everybody just thinks like, maybe I'm the only one doing this, like, no, like everybody goes through their phases of over leveraging, over trading, revenge trading, just jumping in the markets to be in the market and being a freaking degenerate gambler, and just going through this stuff. And it's like on our last episode, we were talking about trading expectations. This is a big one why people fail, right? A lot of people come into the markets and like Adam was saying, he wants to get that money quick. I've been there many times, guys. I've lost count on how many accounts I've blown getting to the point that I am today. The more expensive lessons, but they're lessons, right? I've learned from it. I've grown from it. So I can sit here and joke about it. But, chances are you're in this position right now. And the expectation is a big thing, right? A lot of people come in expecting to master the markets in a week, 2 weeks, a month, 2 months. It's not feasible, guys. Can it happen? Potentially. Can you lose more money than you thought you could? Yes, you could. And the thing is like everybody needs to understand it takes roughly 10,000 hours to master something. So why is it people are coming in the markets and think that they're going to be a master trader within a month, within 2 months, right? Everybody's journey is different. And that's the thing. You have to fall in love with the journey. You have to fall in love with the process of coming in and just deal with the sick shit that we deal with on a daily basis. You got one little guy on your shoulder here, one over here, like, yeah, up that lot size. No, you should put a smaller stop loss, right? You get in those moments. And the thing is like, you have to be able to recognize it. You have to come in and understand it and realize like, look, like I'm doing something I shouldn't do. And that's the thing we were talking about. You don't have somebody over your shoulder. You don't have a drill sergeant. You don't have a boss saying like, hey, dumbass, quit over leveraging. Hey, quit over, revenge trading. Hey, quit moving your freaking stop loss. It's up to you to say, hey, dumbass, quit moving your stop loss, quit over leveraging, quit revenge trading, quit just gambling, right? Like go and jump into the markets and do this stuff. And like, that's the thing that you have to realize is, like Adam said, it's up to you. And it really is. Your success within these markets, it's on you. Crazy, right? Your failures, who are those on? Those are also on you. And you have to be able to come into these markets and understand this and just like be willing to change, be willing to admit like, hey, maybe I was wrong on this trade. Maybe it's not going to go back. Maybe it's not going to, respect this level. And that's why we learn to manage our risk. That's why we learn to manage our risk reward and understand that we're following our system. At the end of the day, we are following our system and we are able to find that consistency by doing such. And our risk is also consistent. Without that, you're going to struggle with trading. You're probably going to struggle to find, the success that you're looking for. You're probably going to keep bouncing around from strategy to strategy. Oh, well, maybe this isn't, this is the problem. My strategy is the problem. I need to go and learn this strategy. Oh, well, this strategy doesn't work. So let me go learn that one because this guy's having success there. Oh, this one isn't working. Maybe I should go try this one. Maybe you should take a step back and realize the strategy isn't the issue. It's up here. It's that consistency by you going in and understanding the risk to reward, by you going and understanding the leverage, by you going and understanding all of the different confluences that you look at in the market to be able to go ahead and justify entering that trade. Without doing so, you are essentially gambling. Right? It's hard to admit. And I can say this because I've been there, right? I'm not just talking at you. I'm talking with you because I've literally been there. I got introduced to the markets back in 2014. I have had my fair share of problems. I've lost enough money where I can talk shit on these topics, right? I've been there. I've done it. Like Adam said, walking down memory lane. And that's what this is about, right? Being able to take all of those trials and tribulations that we have went through and being able to share them with you. So hoping so that you are the type of person that can learn from somebody else's mistakes, right? You have to put yourself in that position. Listen to us because right now, if you cannot learn how to take a small loss, you will be forced to take a large one, right? Let me say that again for those of you that are not paying attention. If you cannot learn how to take a small loss now, you will be forced to learn how to take a big one. And, you're going to get to that point where you think it can go a little bit further. So you move your stop loss a little bit further. And the next thing you know, you get margin calling, you lose your account and you're like, trading sucks. Trading isn't for me. This is why they say nobody makes money in trading, yada, yada, yada. Nobody makes money in trading because nobody takes it seriously. Nobody really goes all in on themselves and then a little bit more, right? The people that you see being profitable, they are the ones that have gone through and they've already become a savage, right? They've overcome so many mental barriers, learned how to become disciplined and patient and just, forgiving of yourself, right? And like Adam says all the time, not taking yesterday's losses in today's trading, right? And that's what you need to be able to do. You need to be able to take it on the chin, learn from your lesson, and just make sure you don't do it again the next day. What do you think, Adam?
I think every trader goes through a moment in time where they get humbled more than they truly should. And this takes me back to it's that same account, bro, that we're talking about. I took a short on gold. I'll never forget it because this is like one of my biggest lessons, right? And I over leveraged it. It's just like I'm about to make this money because I knew how gold moved, right? Just a few pips, a few dollars, whatever it was. I knew I was going to make X amount of money. And that's all I was going for. I was going for a scalp trade. I wasn't going for anything else. I took this trade all of a sudden, down $75. Like, man, like I'm just going to let it keep going. And, all of a sudden I was down like $200. And I'm like, I'm just going to let it keep going. And at that time, like I remember I was like so anxious, so antsy, just because I knew I over leveraged. I knew it. And there's no worse feeling in the world than seeing all your numbers on your MetaTrader just red because it has hit max margin. It's ready just to, get out of the trade, whatever. And I was like, no, I know this trade is right. Like it is going to come back to me. I was like, I'm going to go mow the yard and I'm going to just put my phone down. Like I'm not even going to look at it. So I go mow the yard. And if you know me, first off, I got super bad allergies. I don't want to mow the yard. Like I'd rather just pay someone to mow the yard. That way I don't have to deal with all of everything that comes with that. Right. I was just like, screw it. I'm going to go mow the yard. It gets me away from the charts. It gets me away from everything. So I go mow the yard. I come back. I open my phone and it's like $900 down. And I was just like, are you kidding me? Like, you should have just cut it at that $75. And I was like, you know what? I'm going to stick in the trade. I know it's right. And so I stuck in the trade, right? So it went into a complete new session. So it moved over to the Asian session. So it did its little break, whatever. And I was like, after that break, I know it's just going to drop. It's going to come right back to me, that kind of thing. And so, of course, ultimately it got down like $1,200, $1,300 that I was down in this trade. And I had just been sitting there watching it all night long. Still had it open. And then, right before I went to bed, and he's like, you know what? I'm going to check it. And so I checked it. And then all of a sudden I was like $10 in profit because it had just dipped. It just came right back to me. And I was like, I'm done. I'm taking it. So I ended up just like taking that $10 in profit. But what it ultimately taught me is just like, dude, just follow your plan next time, because that stress, that anxiousness, that worry of just losing that money is not worth it. Because what I really began to understand is that money is like one of the most abundant things in the world, and it's around you no matter what. Like if you look at the ground, I kid you not, my wife is like a sniper when it comes to finding nickels, pennies, dimes, quarters, dollars, whatever it is on the ground. Dude, she like finds it. Like we could be like 20 feet away and she's like, yo, there's a penny over there. And then she just like run and pick up the penny. Like I kid you not. And so it's just like it really like solidifies the fact that money is around you at all times. It's like that theory of like there's always a spider within 5 feet of you, or whatever the theory is on it. That's how money is. And it really, like I said, it just taught me that lesson of like, just follow a plan and you'll be okay next time. That's before I knew about supply and demand, because I was trading support and resistance at that time. And I was just like, dude, this is at a perfect resistance level. Like I'm taking it, boom. And then all of a sudden it was like, nope, we're scooping liquidity and you're out. So no, it just this topic alone brings up just so many memories. But ultimately the one positive memory that I did get from trading is the feeling that I had whenever I was up for the very first time. It was like $1 at the time, right? Because I was trading a micro lot. So it was 0.01 that I was trading. And I remember whenever I was up $1 for the first time, and I was like, this is it. Like, I understand. And it's just like, this is the feeling that I always want to experience. And you will always have that experience if you just follow your plan instead of just putting it all on the table all the time. Because like I said, it's the worst feeling whenever you go to take a trade. This is how you've over leveraged or took a position that you shouldn't have taken. If like you go ahead and take that trade, and then all of a sudden you're just like biting your fingernails, you're everywhere, you're like downing like a gallon of water. Like I've been there. It's just like sometimes like trading is could actually be, a very healthy thing for you, because there are still times that, I may chase the trade a little bit. Like, I'm not going to lie, because I like the setup, and like, I'll chase the trade just a little bit. And kid you not, within like 10 minutes, I've already downed like a gallon of water, and it shouldn't be like that. And, so there are those little quirks that everybody has. I'm not a perfect trader by any means, but I trade on what makes me feel good, right? If I'm not able to walk away from the chart and go to the gym while a trade is live, then I'm doing something wrong. There's something wrong in my plan. There's something wrong in my conclusion of why I took that trade. There's just something wrong. And so whenever it comes to taking that trade, you just need to feel 100% confident about it. Case in point, we were talking about those trades. Everybody's had these trades where you take the entry, runs up, stops you out, goes right back down in your direction. I had 2 of those trades last week. I had a trade, risk that 1%. It, ultimately took the trade, and it, within a few minutes, couple minutes, whatever it was, I don't remember exactly, 30 minutes, 45 minutes, it went and hit my stop loss. And I was just like, man, well, that sucks. Like, I just went ahead and moved on, just because I didn't over leverage myself. I didn't put too much, like emphasis into like, this trade has to work or else. I just went ahead and took the 1% loss, because I kid you not, over the next 6 hours, the trade ran in my direction. And the trade was like a 1 to 5 trade at the time, and it happens. Could I have re-entered the trade? Yes, but I really wasn't too worried about it, because I didn't want to come back to the chart and make a decision off of the 1% that I lost. At that moment, it's just like, hey, let's just move on with our day, continue, growing, continue working on my mental. That way I can come back and just be 100% me that next day. And then of course it happened again the next day. And then all of a sudden it's just like, well, okay, well, but you guys get the point of just, trading doesn't have to be anxious. You don't have to feel stressed. You don't have to be depressed over it. You get to make trading what it is that you want to make. You're ultimately in control of how it makes you feel. So if it makes you feel all of these negative things, you got to switch it up. Like that there's no other way around those feelings other than just you switching it up.
I mean, if you're getting worked up on those losses, you're probably over leveraging realistically.
Oh, 100%.
And that's the thing too. That's an easy sign, like other than based on the fact that like you can legitimately run the math and figure out how much you're leveraging. Like if you're finding yourself getting worked up, like, oh my God, I'm gonna draw down. Like, oh my God, like this sucks. Like, you dumbass, why did you enter that trade? You start getting into that mindset. You might want to take a look at it, because you're probably over leveraging, right? And like that's a big thing. Like that's an easy sign for you to recognize. And like there's many signs like that. Like Adam's talking about, like biting the nails, drinking water, like tapping the foot. Like you're finding yourself like doing that. The thing is you need to have more confidence in yourself as a trader. You need to have more confidence in your trading strategy and your trading plan. If you're getting worked up in those trades, like Adam said, if you can't take that trade and walk away, it's probably because you're doing something wrong. And that's a very easy sign to recognize.
Yep, exactly. And I mean, you have to take profits off the table whenever you see them. Many, many times, another story, another memory. I've been in some massive profits, and then I just didn't take them because, oh, it's going to continue. I'm going to get that full 1 to 15. Oh, yes, yeah. Yes, sir. And then all of a sudden it goes out and just stops me out. And it's just like, wait a minute. Like I was up $500 and now just like nothing. It's all based off of, your goals. And why I keep saying that is it's so important to have a goal, a PIP goal, a money goal, whatever it is, that everyone has different goals. It works different for everybody. And, just some simple math. If you were to knock down $50 a day, 5 days a week for, the entire month, you're gaining an extra $1,000 a month by just hitting $50. So like I said, it's so based on your goal. It's so based on your account size. And, just like Thomas said, if you cannot control $100, you will not be able to manage $1,000, because the trades that you take at $100 are the same exact trades that you'll take at $1,000. You'll just have a bigger position size. Now, same thing from going to 1,000 to 10,000. You're taking the same exact trades that you would take at $1,000 at $10,000. You're just upping the position size. And so all of that comes from your brain. If you're
Strategy
able,
stays the
yeah.
same, risk management stays the same. You're not like, okay, I'm at a $10,000 account, now I'm risking 2.5%. You're staying the same every time you scale up. There's levels to this game, there's levels to trading. And that right there, Adam, I'm so freaking happy you brought up, bro, because there are literally levels to this. And as you go through and you start to progress, you're not upping your percentage. Your percentage stays the same. Like don't look at this as like X amount of dollars, X amount of things. Like keep it at percentage, because when you keep that percentage in mind, at most you're risking 1%, at most you're risking 0.5%, at most you're risking 0.25%, and you get yourself in that position. So when you get into those larger accounts and you start playing with that big boy or that big girl money, right? That's right there. Nothing's going to change. You don't have to get yourself worked up. Oh my God, I'm $1,000 and draw down, or, whatever. Like if you're running that account and that's a 0.5% or 1%, that's cool. Keep your risk the same. Keep your strategy the same. Your plan the same. Everything stays the same, except for the amount of money that you're actually able to pull out at the end of the day, because you're able to go through and you're able to up your money, right? Your lot size, like we're saying, because your lot size, that percentage correlates with that larger account. 1% of a $10,000 account is a hell of a lot different than 1% of a $100,000 account, right? And that's the thing you need to put yourself in the position to understand. Thank you for bringing that up, Adam.
Yep, for sure. I'm full of wisdom and knowledge. I got that alpha. Just kidding. Nah, whenever it comes to really building yourself as a person, not so much just your trading plan, that takes a lot of research. It takes a lot of time. And one of like the guys that's one of the most important people in my life taught me this. And it's, you always have to remain in that student mentality. You have to be able to study the people that you would trade places with. So if you were to trade places with somebody else and they're maybe not in the position that you wanted to be, why do you want to trade positions with that person? It's a very valid question. And so for me, whenever I was able to really understand the concept, that's whenever I started picking books up again. I used to be a huge reader, and then all of a sudden I stopped and I was like, books are for losers. Like that's nerd stuff. Like I'm not going to learn anything. And then all of a sudden I picked books up again, and it's just like, I learned way more about myself than what any other person could teach me is what I'm going for. And so this also really just plays into why traders fail. And it's mainly because some people just don't truly understand themselves. They don't have the self-awareness to, not over leverage, or to, try to make that money quickly, because we all know what fast cash does. It dissolves just as fast. And so, if you want to become the trader that you want to become, it literally just is a decision away to become that trader. At very basic, very minimum, if you got anything from this podcast episode, it's just that you have the ability to step into the shoes that you want to feel. It's just, are you going to decide to do it or not?
That's it. Many reasons why people fail within these markets, guys. Don't let any of these be them. If you need to go through, re-listen to this, do it, right? If you want to go ahead and take it a next step further, you want to become a part of our community, feel free to jump in. We got our Patreon link below, $35 a month. We go through, we talk about trading psychology, trading mindset, all the different barriers and stuff that you have to get through within your trading career. We jump in, talk about the fundamentals, technicals as well. And we're also sitting down and building out an entire intro to trading, intermediate and advanced course. So
if you were able to take home some sort of value from the Bullish Trading Group podcast today, make sure you guys hit the like button, hit the subscribe buttons. That way you get notified whenever we go live with our next episode. Until then, take it easy, and we'll see you in the next one.